Ladies and gentlemen, federal employees, your health insurance, your FEHB as a federal employee is one of the best benefits you have, but there are some changes that you need to be aware of that happen in retirement that you definitely want to make sure you know before going in so that you can keep one of your best benefits. Now, if you're new to the channel, welcome. So good to have you. My name is Dallin Haas. I'm a financial planner who serves feds every day, and I love it. So let's talk about some stuff. First, how do you make sure that you can keep your health insurance into retirement? There's two main criteria. Number one, you have to retire with what they call an immediate retirement, a type of retirement where your pension starts right away. Which could be where you hit your minimum retirement age with 30 years. That's considered a full retirement. Age 62 with 20 years, or age 62 with 5 years. If you hit any of these, you are eligible. Or if you qualify under a VERA, or voluntary early out, basically an early out retirement is what they call it. Or an MRA plus 10 retirement. MRA plus 10 is what they call it. Any of those will qualify you for health insurance to keep it into retirement. But that is just the first criteria, is to have a full retirement. The second criteria is to be covered under FEHB for the 5 years before you retire. 5 continuous years before you retire. Now, there's a couple exceptions to that. Let me explain. Number one, if you and your spouse are federal employees, as long as you were both covered under FEHB somewhere, whether your own plan or Self Plus One plan for your spouse, as long as you were both under a FEHB plan by somebody for the 5 years before it, then you are good to go. And if you had a break in service within the last 5 years of your career, the only time that they actually care about is if you're a federal employee. So if you left the government and came back, and then within 5 years you retired from the government, that's okay. You can still keep your health insurance potentially, as long as all the times you were a Fed, then you had your health insurance. The only time where you may not qualify is if you were a Fed and you chose not to be on FEHB, then that can be a problem. And by the way, for those that are military vets, if you have TRICARE, then TRICARE can actually fulfill the 5-year requirement for health insurance as long as you get on FEHB at least the last open season before you retire. Okay? So those are the rules on keeping it. You got to hit the 5-year rule and then have a full immediate retirement. Next, one thing to know is that in retirement, you actually have access to open season, just like active federal employees do, which is fantastic. You can make changes in retirement every single year if you'd like to. You can change plans around. You have that flexibility in retirement as well. Now, here's the big one. What about the price? How does the price change when you retire? And the answer is it kind of changes, but it kind of doesn't. Let me explain. So right now, the government actually pays about 75% of your premium. If you're a full-time active federal employee right now, you pay only 25%-ish of the premium. The government pays the rest. In retirement, they continue to pay their portion. Assuming you're eligible for it, they will continue to pay their portion. So you pay the same premium. So as a retiree, you've got access to the exact same premiums that the active feds do, which is great. However, this is the part that changes. While working, you get a tax deduction for the premiums. In retirement, you don't. So while the price itself doesn't change, the after-tax cost actually does. So let me explain. If your salary is $100,000 or so, if every year you pay about $5,000 in premiums for health insurance, then while working, you only get taxed as if you made $95,000 in this simplified example. It's a tax deduction, but in retirement, that goes away. So you have access to the same price of premiums, but the benefit of having those be tax deductible, that does go away in retirement. So that is the tax side, okay? So the price stays the same, but the tax side does change just a bit. Last but not least, one of the big changes to keep in mind for health insurance in retirement is when you turn 65, you have the option to get on Medicare. Now, most feds aren't required to get on Medicare unless you work for USPS or you have TRICARE. Okay, if you have TRICARE and you want to keep TRICARE, then you have to get on Medicare. It's required. And if you're USPS, you can check on the specific rules for you. But if you retire after certain dates, then if you work for USPS, you will be required to be on Medicare. But everyone else, all other federal employees, you do not have to get on Medicare, but long story short, most feds actually do get benefit for being on Medicare. I've got whole videos on whether or not you should do Medicare or not. You can check those out for more details, but just know for most feds, it does make sense. You can check those out. But those are the big changes. Number one, you want to make sure you can keep it into retirement. You have open season every year, even in retirement. The price stays the same, but you lose the tax deduction. And of course, watch out for Medicare at 65. Make sure you know what your plan is for that. So that is a summary. I hope that's helpful, and I'll see you guys in the next video.